Ladies and gentlemen, welcome back to another Bitcoin update. Today we're going to be looking into the monthly chart for Bitcoin, the monthly candle specifically. In 4 days, guys, we will be seeing a monthly candle close, and that's very major considering the fact that we need to be holding a monthly candle support level, 28.8K, at an absolute minimum. That is the level we need to hold. So it's very important that we hold that level. And so obviously it's pretty controversial now because we're seeing pretty dramatic price action on Bitcoin. It moves downwards, resistance, support flips, breakdown from, support. And so there is a question in the air as to whether we will hold that level or not. A lot of people aren't even looking at the monthly chart. They're looking at something completely different. I'm looking at the monthly chart. I'll tell you exactly why I'm looking at the monthly chart. And I'll tell you why I'm actually relatively optimistic going into the monthly candle close. That's the main topic. A subtopic we're going to look into as well. Obviously short term, all that kind of stuff. But ultimately, another subtopic we're going to look into is the recent move downwards on the DXY and gold and how Bitcoin's managed to hold up pretty well considering the circumstances, looking into Bitcoin independence from those kind of markets and what that means for Bitcoin on a macro scale and what that means for the bearish arguments. Guys, let's get into the video without further ado. So guys, 2 topics today, let's dive straight into them. The first topic on Bitcoin I want to discuss is actually the monthly chart, and then we will get into the very important thing that has happened in the last 24 hours, as mentioned in the introduction. The monthly chart, though, is quite important because we have 4 days and 1 hour, so about 4 days really, until the monthly candle close. In 4 daily candles, we will see the monthly candle close, and monthly chart on Bitcoin over the last, 6-7 months has been really a topic of interest for me specifically, because I am a cyclical person. I believe there is a 4-year cycle theory on Bitcoin, a 4-year cycle trend on Bitcoin. It's not even a theory anymore at this point. It's just playing out, all right? Every 4 years, we see a bull market, okay? As you can see, 1, 2, 3, and every 4 years, we see a bear market, as you can see, 1, 2, 3, and then the in-between phase is kind of the gray area where we kind of go sideways, kind of go upwards before the next bull market, and that's what we're in right now. Now, within this 4-year cycle trend, there are many micro trends that have occurred, such as date range trends. We can bring up the 4-year cycle chart in a second and show you what I mean by that. In the writing over here in color-coded, you can see it matches up with the date range measurements I've made here. We have trends from top to top, bottom to bottom, top to bottom, bottom to top, bottom to halving in terms of date ranges, all of which have played out 3 times, all of which, bring us to a conclusion of when the future will reach, the next all-time high, the next top, etc. The next top will be, for example, in Q4 of 2025, most likely October. We can come to those conclusions using these trends and extrapolating them. There are also trends in regards to structures, and this is why I'm interested in the monthly chart right now. I believe that the monthly chart has a structural trend in which we form a horizontal line during the bull market, and that's a support line, and that's marked in red. We formed it at around 430 in 2014, and then we have a yellow support line during the bear market, which marks the bottom, a horizontal zone, and that's what we saw marking the bottom in 2015, that's what we saw marking the bottom in 2019, and that's what we saw almost marking the bottom here in 2022. We went below it slightly, but we saw a resistance support flip from a downside, and we have seen deviations below the line in the past, so I don't believe that invalidates it at all. So ultimately what we have really is a date range trend in regards to 4-year cycle, multiple date range trends, and a structural trend on the monthly chart that's forming that, yes, is a bit more new, and yes, is a bit more unreliable, but it's certainly there. And as you can see, the previous support zones, the red support line, turns into resistance in the future. And this is something we've seen time and time again. If we zoomed into short term, you can see it really happen in 2018, even in 2019, even now on the monthly chart, you can see brief resistance there. And obviously, it happened very strongly with multiple monthly candle rejections in 2016. And right now, if we're looking at the past few months, we can see a brief period of rejection from that red line. So it's very clear that the red support line, kind of like the bull market foundational support line. And I say that because that's the level we bounce off during the bull market, right? We bounce off it, we bounce off it, we bounce off it. So that's like the bull market foundational support line, or perhaps even the bear market support line. Ends up being the resistance line in the future, the resistance line in the in-between phase of the cycle. And that's what we've seen on 3 occasions. So the fact that we've actually gotten upwards and broken above that line, broken above that red line, is great news. We did that on the last monthly candle close, but now we're in a situation in which we're retesting it from the upside. Now, obviously, when you break support, for example, if you have a triangular structure, right, let's just draw up a triangle here, and, we break it, and we break it to the upside, we come back down, we test it for support. If we bounce off of that level, that's actually very bullish, because it means that the level that was previously resistance, the level we were previously trying to break out above of, is now coming back down and acting as support. We're bouncing off of it. So we've flipped the level. That's what it means. It's a resistance support flip. So if Bitcoin on the monthly chart here in 4 days can manage to close above this red line, now that we've come down and tested it, that would be very bullish. That would be a resistance support flip. If on the other hand we drop below it, so this is a close below like 29.3k in the monthly candle, right? If, however, we close below it, that will not be good, because that will be a drop back into the previous monthly candle range, and that would indicate further downside price action and a potential short-term top here, or even a medium-term top, and trending downwards to lower prices. So we really want to be seeing a monthly candle close above 29.3k, or even above. Look, if we bring it down, we can bring it down slightly to this wick over here during 2021, even above something like 28.8k. You know, realistically, 29.3k would be ideal, but it's hard to say whether 28.8k or 29.3k are the actual resistance zone. It's more likely it's actually a range between the two zones. And so what I'm actually going to do now for you is I'm going to draw up a horizontal box. We want to be seeing a close on Bitcoin on the monthly chart, as you can see, above this green horizontal box. And that is something we'll be monitoring very closely. Now, do I think the Bitcoin can do this? I think the Bitcoin is probably quite likely to do this, okay? I actually don't see it as particularly likely Bitcoin drops below the monthly. And this is where we go into the second topic of the video. Yes, Bitcoin has, broken below. Let's delete this so you can see it a bit more clearly here. Yes, Bitcoin has broken below an ascending broadening wedge formation, and that's not necessarily a good thing at all. In fact, it's a bad thing, right? Because we've rejected from an upper range. This red zone here at 32k is a range, the top of the range that we've seen, between 24.5k and 32k for a long period of time, and we've rejected from it before. We rejected from it over here, it led to a downside drop. We rejected from it over here, it led to a downside drop, and we've rejected from it again, and we're in the midst of a downside drop. So although a rejection from that level is not good, especially considering we saw a structural breakdown as well as a rejection, and we've also seen a bearish resistance support flip in the short term, right? We broke below the level. This yellow line, by the way, on the screen is the bottom of the ascending broadening wedge formation that we broke below. We came up, retested it, failed to get back above it, and we've dropped below it. And not only have we dropped below the level, the wedge, we've also resistance support flipped on the wedge, which is bearish, and we've also dropped below a orange support line, as you can see, brief support time line in orange that we were holding for a period of time. We've dropped below that as well. We've come downwards massively on Bitcoin. So, yeah, not necessarily in terms of percentage, but in terms of structurally speaking, we've come downwards quite a bit, and we've lost a lot of progress there. So that's not good, but it's not unexpected either, right? It's not good, but it's not unexpected either. But the main thing who cares what's happening in the short term, really? I mean, what I'm asking is, will Bitcoin manage to save the macro in regards to closing above 28.8k at least? And that's the real question, because it doesn't really matter what happens in short term, who cares? We're still in the same range. So long as we're above 24.5k, right, which is the bottom of the macro range here, it actually doesn't really matter what Bitcoin does on a long-term basis. It's all short-term movements and short-term deviations. The only reason we're concerned with short-term right now is because of the monthly candle close and the fact that we need to maintain that level for 4 days. We can go below it after that, as long as we come back above it, it's fine. For 4 days, we need to maintain that level. Now, here's why I'm not super concerned at this point. I might get to a point in which I'm more concerned over the next couple of days, but at this point I'm not super concerned because we do have a major amount of support here, and support namely coming from the 50 SMA. If we're looking at the red line on the screen here, which is the 50 SMA, we can see this is a line that has proven to lead to bounces quite a lot on Bitcoin. Now, look, okay, put it into context, right? We only need to hold this support for 4 days, as I said on the monthly candle close. That's really what's important. Now, this red line, what you can see, if we're just looking at the last 7 months since the bottom, because this is the most recent period of similar market conditions that we can look at, and that makes it the most relevant. We can see that if we're looking at retested this red line, we can see bounces off of it. So from the bottom side, we came up in December here. We tried to break above it. We saw a bounce off of it. That's what we need to be seeing here, a bounce off of it. Yes, we did break it upwards eventually, but ultimately short-term bounce off of it. It managed to hold for a period of time. We saw a drop below it, just straight up here in March, which wasn't very good. We saw a bounce off of it here on 2 occasions in April. Bounce. Yes, we dropped below it, but it's irrelevant. The fact of the matter is we bounced off of it. And then, of course, on the downside retest, again in May, bounced off of it over here, held it for a period of time, broke above it. So it is, with the 50 SMA, we do bounce off of this thing. It's not just something we drop below. Very likely, we're not very likely to drop below it straight away on many occasions. And right now we're testing it for support. We haven't seen a bounce yet, but historically speaking, we do generally see bounces. So it would be ideal if we did see some sort of bounce, or at least held it for a few days, because that would really put us in a good position to hold a good level in regards to the monthly candle close. We would love to see that. Now, we also need to take into account that we could drop below it, given the fact that we've seen bearish structures, but I also want to note the fact that 4 days away is actually a decent period of time. If we're looking at 4 days from now, it is the 28th of July right now. Okay, 29th of July is 1 day, 30th is 2 days, and the 1st of August is really 4 days away. So if we're looking at when the monthly candle will actually close, it will be at this blue dashed line. That's a decent period of time, okay? So what we could do is we could go downwards and test lower support, such as 28.5k, which is a really important support zone, because 28.5k is the lower red line here. It's something we tested for resistance on multiple occasions. It's something we tested for support over resistance again over here and here. So that's really our next major support zone, 28.5k, sorry. It's also where, if we're looking into it a bit more technically, it's also where we're seeing things like the bull market support band accumulate. It's also where we're seeing things like the 200-week SMA. I don't know if I have a weekly chart up right now, but you take my word for it. 200-week SMA is in that region, as well as the uptrending logarithmic support line in that region. So even if we do go downwards, guys, you have to remember the level we have to hold on the monthly chart is 28.8k at a minimum. Okay, it'd be ideal if we hold 29.3k for sake of clarity, but realistically, the bull market support zone that this monthly resistance is stemming from, okay, is actually 28.8k at the low. So that's the minimum place we need to hold for us to be considering the monthly chart somewhat, decent. So 28.5k, okay, which is where our next support zone in the short term is not very far away from 28.8k. So it certainly stands to reason that we could actually even go down on Bitcoin as per short-term TA and bounce around there and still close above 28.8k, even if we're in that same lower price region. I'm not particularly concerned. I'll end kind of this video by saying this, in this section of the video by saying this. I'm not particularly concerned about the monthly candle close at this point in time, because I think that even if we do go downwards, which I don't think is even guaranteed, okay, in short term, because we do have support, even if we do go down to the next 4 days, I should say, we do have a next major support zone around the price region in which we need to hold the monthly candle. So I think that Bitcoin is relatively in a, it's not in a good position. A good position would be back up in the structure here, but I don't think it's as risky as it could be in regards to monthly and macro. So I'm optimistic. Look, here's how I put it. I'm optimistic going into monthly close. Now, obviously, if that changes in the next few days, we drop below something like this diagonal orange line, that's going to change, and then I'll look a bit more bearish from that perspective. But right now, I just don't see a dramatic amount of bearish evidence for that monthly candle close closing badly. I think it's still relatively likely that it closes well. But we'll have to monitor it. We'll have to see. One more thing I want to talk about in this video is the DXY and gold. Now, this is a strong sign for Bitcoin, okay? What we've seen, I'm going to read a post to you actually, okay, and then I'll show you the charts. Currently, this is 8 hours ago, I posted this on YouTube community, my community post here, right? It's a text post on YouTube community. Currently, the bearish argument that involves Bitcoin being dragged down by traditional markets is asinine due to a lack of correlation. Now, obviously, guys, the bearish argument on Bitcoin, people have been making bearish arguments on Bitcoin for a long period of time, obviously, but mainly people say that Bitcoin will go downwards to new lows because the traditional markets will go downwards to new lows, and hence that will drag down Bitcoin. There's not many people who are using TA arguments to suggest that Bitcoin will go to new lows. There are Elliott wave theory arguments. I would argue Elliott wave theory is way too subjective and hence not relevant. I would argue the objective data that we've seen, the objective breakouts we've seen, the objective trends we're seeing right now are much more important than the subjective Elliott wave theory. And hence I would debunk those arguments, but I would argue that kind of the main case that people are making right now for Bitcoin going to new lows, which I disagree with, is Bitcoin being dragged down by traditional markets. And the fact that we're seeing a lack of correlation between Bitcoin and traditional markets right now makes that argument asinine. In the last 3 hours, for example, at the time of this post, we saw the DXY pump massively and gold plummet massively. Now, if we're looking at DXY and gold, DXY is a chart that is reverse correlated to Bitcoin. When this goes up, Bitcoin should go down, and gold is the opposite case. When gold goes down, Bitcoin should go down. So both of these charts did a very bearish thing for Bitcoin. If we're looking at the correlations on Bitcoin between these markets, between these two charts a year ago, for example, or 9 months ago, Bitcoin would have seen dramatic price action to the downside over the last day or so. But rather, Bitcoin has actually held its own pretty well. It's gone downwards slightly, yeah, but very slightly, right? A few hundred USD. And I made the case that, look, if we saw this 9 months ago, with the correlation we saw between Bitcoin and traditional markets 9 months ago, we would have seen a 5% drop minimum. So the point that I'm trying to make is that Bitcoin has gained a dramatic amount of independence from traditional markets. And this is not just an opinion. This is objectively true. If you look at the traditional market correlation coefficients that Bitcoin, is having between these charts right now, it has been sharply declining for 9 months ever since QT. And realistically, the only time we've ever really formed a correlation between Bitcoin and traditional markets, a strong correlation, was during quantitative easing. So the fact that we're in quantitative tightening right now, yes, we're coming to an end to it. It will be interesting to see where that correlation goes. But the fact that we're in quantitative tightening has led Bitcoin to kind of be independent. And that's my theory, that's my speculation. I don't know why exactly Bitcoin has become independent. The fact of the matter is it has become independent. I just suspect it's something to do with quantitative tightening and the terrible state of the economy. In fact, that people are seeing Bitcoin as more of an individual asset now rather than just a clone of the markets like it was during COVID. But yeah, Bitcoin's gaining independence, and this is very, very good. So even during short-term, massive moves on DXY, massive moves on gold, it's not very often you see a 2% move downwards on gold in such a short period of time. Even during that, Bitcoin's managing to maintain a degree of independence. That's good to see, and we want to see that continue. We want to see Bitcoin keep that up. I just wanted to point that out because it strengthens the bullish argument in the sense that it debunks the bearish argument. And so that's good in macro perspective. We already know macro is very bullish for Bitcoin, though. It's not a surprise. Macro looks good for Bitcoin. This is not new information. This is not new data. I mean, if you don't know the macro looks good for Bitcoin now, all you need to do is look at the ranges we're in. We've moved upwards 2 ranges. So we're 3 ranges really up from the bottom. I mean, we had a range over here in red between 15K and 18K. That was like the peak bear market range, the low range. Orange range here was the bear market consolidation range. Right now we're in a neutral range trying to push upwards into the bull market playground. So, I mean, macro scale, Bitcoin's moved upwards significantly. It's 9 months from the bottom. It's 104% from the bottom. I mean, the macro is bullish. I mean, there's no doubt about that. And if we're looking at 4-year cycle, there's every indication that the bottom is in. But that just adds to the bullish argument on macro in regards to addressing the bearish claims and slightly debunking them. Now, obviously, correlations can shift, but that's the case at this point in time. The case at this point in time is Bitcoin is independent, and independence is obviously good. If Bitcoin's going to achieve any of its goals, if Bitcoin's going to have any utility to investors or traders, it has to be independent, and that's what it is right now, which is great to see. But guys, ultimately, what I'm concerned about right now, and what I'm looking at right now, is monthly candle. 28.8K is the critical level, 28.5K is the critical support on short term. I believe at this point in time that we will most likely hold the monthly level. Obviously that's subject to change. 4 days is a long time. We'll have to look into it again, but I'm just bringing it to your attention now so I don't have to spring it on you, 24 hours before the close. But guys, thank you for watching. Check out the Bitget exchange. Have had a rebranding recently, that remarketing. They're already a very popular exchange. They're trying to gain more popularity via marketing themselves further. 5 times lower fees than Binance. Protection fund. If something happens to the exchange, you can gain access to that fund and claim your funds back. Reserves information is released. It's all good there in that regards. Copy trading, everything you need. And guys, non-KYC as well. So if you're from the United States of America, which is blacklisted on the exchange, you can sign up using a VPN and also clicking other as country of origins when you're signing up, and you'll be able to gain access to this exchange from anywhere in the world. And the same applies if you're from Australia, UK, whatever. If you don't want to KYC, you can if you want to. You can do that, and you can use this exchange anonymously, which is great for various reasons, and also lines up the fundamental values of cryptocurrency. But very, very low fees, and you can get even lower fees if you sign up using my referral link. 15% trading fee discount for life using my referral link in the pinned comment description below. Do that, guys. Help out the channel. Also, Crypto Academy. If you want to learn how to trade, this is the place you can do it. As you can see, we've got a website here. I'm going to have to fix up this website. We've had some brief dilemmas with the website, but ultimately, I've got a website here, and I should be able to have it up and running within the next few days again. That explains the course, explains what it is. Ultimately, you can throw us an email at cryptoacademycourse@gmail.com. We'll get back to you with all the payment information, all the course information in an extensive manner. Check that out if you want to learn how to trade. And finally, guys, the VIP group. If you're interested in altcoins, if you're interested in trading altcoins on VIP, we have a 79% 99% win rate, which is very, very good. We trade altcoins 3 to 5 times a week on there. We give you entries, stop loss, take profits, etc. Everything you need to trade a coin is on the VIP group, and we're trading it very, very successfully. So guys, check that out as well. Thank you guys for watching the video. I hope you enjoyed, and I'll catch you in the next one. Cheers.